I wanted to talk a little bit about ESG 2011, which was a conference held in New York on the 13th, which I had the pleasure of attending. And ESG is a movement that wants to evoke sustainable growth that's environmentally sustainable, socially sustainable, and so forth. Basically, they want to introduce all of those elements into investments. Now, currently, a lot of investment companies are driven only by returns. They want to see percentage no matter what, and they'll invest in whatever company they need to make that happen, whether or not it's ethical, whether it produces cigarettes, bombs, whatever it is. They'll invest in those assets to maximize returns for investors. Traditionally, people find that fiduciary responsibility means working in the interest of the client, which means maximizing returns as just a percentage at the end of the year. Now, are you really working in their best interest if you are providing them returns, but you're investing in companies that are killing the environment, that are using slave labor, that are decreasing their tax contribution to the United States government, and so on and so forth? So there's a lot of companies that are producing returns, but they may be using unscrupulous tactics or business practices and so forth. So, are you really a fiduciary when your investment practices would basically ensure that there's not going to be much of a future for this person's kids or their grandkids? Are you really a fiduciary, and are you really working in their best interest with the investments that you're making? Let's say that the definition is that you're just maximizing the numerical percentage returns. In that case, most pension funds should be invested in strip clubs, if you think about it, because strip clubs are a great investment. They're recession-proof. They have cash flow. And in many cases, their operating expenses may be low. They might have a great balance sheet. So in that case, if these pension funds are being true fiduciaries, they should be chock full of these strip clubs. But that's not the case, because pension funds will purposely avoid certain types of investments, whether or not they would provide high returns for investors. So I thought that was a very interesting point, because, like I said, fiduciary typically implies that you're maximizing returns at all costs. But then again, there are also conditions which investment advisors, they avoid, and investment managers, they just avoid certain investments because there might be ideological differences or the fact that they just don't want to be involved in a strip club. But even the term fiduciary right now is getting a lot of pressure, because there is that duality. You could be producing returns today, but you may be destroying the environment tomorrow. And I think we're all aware of what's going on now. Our rate of consumption is not sustainable. So this ESG movement may very well work its way into the investment stratosphere and become more influential as time goes along. It may even be something that investors go towards. Like most people will walk into a coffee shop and buy free trade coffee. They don't know why they're buying free trade coffee, but they see it there. It sounds good. They feel like they're making a difference. They're doing something great, so they're going to buy that. So this is the movement that's being put out there now, and basically this would involve investment companies moving more towards, let's say, green technology. So you might invest in solar technologies and other more environmentally friendly ventures that may work towards a greater good instead of just whatever's producing the highest returns right now. So this brings on the fiduciary standard as a more long-term policy than what we see today, and I think this would be really interesting to see how this develops. This will definitely catch on, because everybody knows that we can't sustain the current rate of consumption and so forth, so this might be something very interesting to look out for in the next few years.